Miles, good to see you again. So you could say that it's a buyer's market right now, if you can get a mortgage?
Definitely, definitely. More supply has been coming to the market over the last few months since home information packs were suspended. We are seeing some signs that that perhaps is coming to an end, but for those that are forecasting a double dip in the housing market, there does appear to be 3 months of falling prices on the trot, so therefore could be an interesting next few months.
And how are the banks' balance sheets right now affecting their willingness to lend?
Well, this is the key thing. Buyer demand, it's all about willingness to purchase, and that depends on their sentiment and ability to raise the finance. And we've not really seen much increase in bank lending. There's been some noises, but in reality, the number of proceedable buyers is still not keeping pace with this excess supply in the market, which is giving this downward pressure on property prices.
And how much of an impact are interest rates having on affordability right now?
Well, for those in homes, then they're enjoying record low interest rates. But the problem is that perhaps they aren't able to move because they're sort of stuck with their lower interest rates. Perhaps with prices dropping, they're not able to raise the equity to move up the ladder, and therefore we're getting a degree of stagnation which is removing some buyers from the market as well because people aren't trading up.
So, Miles, what can we expect in the rest of the year and indeed in 2011? Can we expect further declines in home sales?
I think we're going to have a very quiet winter with mortgage supply not increasing, this hangover of oversupply as well, and therefore very much depends on unemployment and forced sales. At the moment, they're not showing signs of increasing, and that may well mean that we have more stable house prices, perhaps drifting down, but avoiding a crash. Yeah,
that's what I was going to say. So, I mean, if there aren't enough sales, is that going to mean that prices come down significantly?
All depends on the motivation of sellers. I think a lot of sellers are probably shutting up shop at the minute. They're able to do that. If interest rates were to increase and unemployment was to increase and they're forced to sell, then you get a lot more motivated sellers on the market, and with fewer buyers around, that can drive prices down.
And could mortgage lending improve in the near term? What signals are you seeing?
Well, some banks are starting to securitise their mortgage book. I think RBS has just held a sale of some of their mortgage book. So we need to see more of that, but it does take a lot of money to fund the UK mortgage market. A lot of foreign lenders have withdrawn and therefore relying mainly on the UK banks. And as we've said, the UK banks are looking at their own balance sheets rather than to lend a lot of money out, particularly to the first-time buyers, which is the volume end of the market. They're obviously avoiding the risk of the sector of the market that can put down a lower deposit.
Okay, well, thank you very much indeed. Miles Shipside, Commercial Director for Rightmove. Thanks for your time.